Okay, welcome to this week's Great Quarter Guys. I'm Kevin Hill in the host seat today. I have Andrew Cox, our regular co-host here with me in the Air Jordan hat, and our special guest, the Sultan of Sonar, Zach Strickland, who runs data intelligence here
Freight market intelligence.
Freight market intelligence here at FreightWaves. So welcome everyone on LinkedIn, Twitter, YouTube, all the live streaming that we're doing right now. And those for us, or those of you that will be listening to us on a podcast recorded in some place at some time in the future. So today's episode, or let's Great Quarter Guys,
right?
number 11. And this is where finance meets freight, and we talk about that and everything in between. And this week we are going to look at Walmart and Walmart's financial picture, their stock price, their valuation, and also their transportation network. And we're proud to announce that starting today, our friends at Carrier Direct are helping us do a lot of the research behind the show, pulling numbers for us and giving us their insights from their consulting practice with 3PLs, carriers, and also shippers, and really everything transportation. So big shout out to Peter and Ryan and Diane, who helped us put this together at Carrier Direct. So with all that said, let's dive into Walmart, and then we'll hit some of the phase one of the Chinese trade pact, and I think that's supposed to get signed tomorrow
morning. Yep.
So let's see if it actually does this time.
Right.
It's been kind of delayed. Then we'll talk some real-time capacity with the Sultan of Sonar and talk about the DHL supply chain pricing power index that we do on a weekly basis, and then we'll do some long shorts, which should be very good. So let's dive into Walmart. Andrew, you took the lead on most of this research this week, so I'll let you start.
Yeah, I mean, it's the big one. Walmart is one of the biggest retailers, if not the biggest retailer in the country. We can go through a little numbers. In the total stores in the U.S., they've got about 5,400, but that pace has slowed a lot. They've only added 20 in the last 2 years. International store count, their biggest international market is in Mexico and in South America. They've got 3,400 stores there, and an article was written today by Noy, correct? Noy Mahoney?
Yeah, Noy. Yeah.
And he actually said that Walmart added 134 stores in 2019 alone in Mexico, so that's massive growth down there in South America. And we're going to talk a little bit about their distribution centers and the way that they kind of do their transportation and supply chain. They've got 173 as of 2017 in the U.S. alone. So again, massive. The total square footage of those DCs is larger than Manhattan. So you can try to get an idea of it. A little bit for comparison, Amazon has 241 distribution centers, so about 70 more, but less square feet. So Amazon's more spread out, and they have smaller DCs.
If you look at the sales number, I think Walmart still has double the sales that Amazon has. So a little bit over $500 billion a year, with Amazon right around $250 billion.
That's insane,
It is
considering
insane.
what the state of the country and just in general retail. Like the numbers are like, oh, e-commerce, and yet Walmart still.
It's still just
a powerhouse.
It's
Yeah.
a powerhouse. It
And
has
it's
a lot of
even-
real estate.
Yeah, and it's come back. I mean, they've been on an incredible run for the last 2 or 3 years. They've made heavy investments into e-commerce and fulfillment. Their e-commerce has grown between 30 and 40% each of the last 12 quarters. So I mean, just incredible growth. 41% last quarter. Go ahead,
I think they're only up to about $15 billion annual on e-commerce, and a lot of that's produce and grocery.
Yeah.
So as e-commerce goes, they're still in the early stages of that. Only about 1% of their sales come through online, which is strange to think, but
Yeah, I mean, you look at a company like Toys R Us, a few years ago declared bankruptcy, and a lot of the reason that they decided to go or they went bankrupt was cited as being a lack of e-commerce presence. I personally have kids, so I was in Toys R Us every year, waiting for that. And so it's interesting to me to see that Walmart, the largest retailer in the country, basically, I mean, their website isn't that sophisticated.
it's not. And I know that we've been covering it for 3 weeks now, and there was a meeting, I think, in Arkansas. I don't know if it was an internal meeting, and one of the executives said that the way forward is to build bigger stores, more stores. Not necessarily leaving e-commerce behind, but their strength is their store locations and DC centers. And
They've done tons of research on where to place these stores too. I mean, they didn't just plop them down in the middle of like nowhere, and they
That's
know
right.
exactly where their population centers are located. Their demographic studies are really good. Where Walmart does not scrimp on is doing their research on where to place things.
And to expand or build a bigger store, they are not shy about that.
Mhm.
From a hometown where we had about 20,000 people and 3 different Walmarts over the years, right? The old Walmart, you had the intermediate Walmart, which are both strip malls for like Big Lots and secondary retailers now. And then you have the big superstore, and there might be another one, and you might have another lost Walmart
Yeah.
out there in a few years. It could be a 4 Walmart town over the years, over the stages. So they close them down, open them up. They also have the fresh markets,
Yeah.
or
the
neighborhood
neighborhood markets.
groceries,
Yeah,
neighborhood markets.
Neighborhood.
So it's Walmart is a big real estate holder company. I guess those are valuable assets in and of itself, and also if you're going to set up a supply chain for e-commerce, those stores are great warehouses.
Yeah, and let's not kid ourselves about their e-commerce position though. Over the last few years they've made a half dozen acquisitions of digitally native brands. From Jet.com to Shoes.com and Moose Jaw, Bonobos, ModCloth. I mean, they've made a lot of digitally native brand acquisitions to try to position themselves as an e-commerce power. And not all of them have always worked out. Jet.com sales they try to kind of push Jet.com to be a niche go after that. The group of people that they've traditionally had a difficult time going after, the young millennials, urban millennials, but they've gotten a lot of the expertise from Jet, and that's helped them build out their e-commerce platform through Walmart.com. They've had like 5 or 6 high-level Jet people that are still working now as head of e-commerce and stuff at Walmart.
And basically, I forgot to say, we are live streaming, so if you have any comments, especially on LinkedIn, we have LinkedIn up right now, so just shoot us a question, comment. We might ask a question for your opinion here in a second, and we can go from there. So going back to their acquisitions of e-commerce, do you think that's the right strategy to approach? Because, I mean, you're looking at the number one retailer probably in America, maybe in the world. And so is that to buy more kind of bolt-on e-commerce type of businesses instead of maybe just going in organically and doing that?
I mean, to Andrew's point here, the fact that they're utilizing somebody or a company for its resources, people that have been in the space, they're not just trying to apply their old logic to, this new, this e-commerce space. They're not applying old Walmart, brick and mortar logic to an e-commerce space. Like, hey, you go start the e-commerce thing now. Bill in accounting goes over there and he's like, I don't know, but they're using these people. So I think I love the purchase because you're basically skipping the initial steps of building that organic, market. Like, I love building from the ground up because you have control of the infrastructure. But for a company like Walmart, you've already built your infrastructure up. You need to acquire people that have this experience.
I like it too, right? If you just take shoes.com, right? So Walmart could sell e-commerce shoes, unless, they don't have the greatest selection of shoes.
No.
So why not just go out and buy a great brand that's up and coming, that's heavily into e-commerce, like Amazon did with Zappos.
Yep.
Right? Kind of replicate that, and you buy shoes.com. So now you have this great shoes offering, or the outdoor Moose Jaw, right? So Walmart's basically not in the business of creating great clothing brands or shoe brands or that type of experience. They're more of the general store.
Yeah, and they have made a little bit of a push to acquire some of these brands and get them in the store. So, and I think that they're doing a good job of that. Their fashion. We'll get into a little bit of their margins here in a little bit, but I think they're doing a good job of expanding into the fashion and the home, especially home and appliances, stuff like that, away from grocery, diversifying a little bit in their stores.
Yeah, I think the end game here for them is to basically have this online presence along with a store presence, because a lot of the reason that they exist is that brick and mortar presence.
And that can be a competitive advantage, right? There's an article out, and I can't remember exactly where it was. I think it might have been Forbes in the last week or so. That's their competitive advantage, is that all these stores, all these super centers are great warehouses.
Well,
right?
and
so you can deliver out of those stores. And if you count the stores with the warehousing DCs, they dwarf Amazon.
They technically have a huge advantage over Amazon in terms of just having an infrastructure set up for this process. They have a logistics department. They have huge amounts of transportation. The only thing that's keeping them from really being this dominant force in the space is their technology and their website. Amazon is 100% warehouse and website driven, whereas Walmart, but again, to your point, one of the biggest growing sectors of Black Friday this year was the in-store pickup. I believe it was like 46% up year over year for stores like Best Buy and things like that. So people aren't relying on, that delivering to my house aspect anymore, specifically now that they've kind of been burned in the past. So
you're exactly right.
And I was just going to mention this another Forbes article that came out not too long ago. It was called it's done a research done by First Insight, and it was called Amazon Past Its Prime. And they did studies year over year of especially young people's preferences to Amazon and Walmart. And I was very surprised to see. Anecdotally, for me, it makes a lot of sense because I still prefer Walmart over Amazon. But let me run some of these numbers by you. So the majority of U.S. consumers prefer to shop at Walmart versus Amazon in 2019. This is a complete 180 year over year. So in 2018, it was 47% of respondents said they would prefer to shop at Walmart. In 2019, 55%. So I was just, that's the first thing. Why do you think that people are preferring? You said people have gotten burned before. Why do you guys think that people are now preferring to shop at Walmart over Amazon? So we went up
from 47% to 55%?
Now 55, yep.
To now 55%.
Well, I mean, it obviously boils down to consistency and reliability. I mean, Amazon, let's not kid ourselves. They've kind of been a victim of their own success in the way that, initially when you were on Amazon, you were good with like that 7 to 10 day window. Well, now Amazon has really dedicated themselves to this Prime delivery. So I have a Prime account. I'm sure you guys have a Prime account.
Of course.
So they've built this whole mentality around Prime. And I'm a psychology minor, so I have this. I always find it interesting when I can apply some of these psychological tricks. So that whole, I'm sure people out there in the space have heard the whole managing expectations. You want to, undercommit, overdeliver. Well, they've basically overcommitted and now underdelivered in recent years in terms of I know that I myself have had the experience where my package didn't get there in, the 2-day window. And then I had to hear about how, well, it's only from when the time it shipped. And I'm like, well, no, that's not the way it was.
Yeah. I ordered something last night, Monday night, 10 o'clock. And it says guaranteed delivery by Thursday. I'm like, seriously, Thursday?
Yeah.
Thursday? And this one-day shipping has really tripped Amazon up in the beginning. Their shipping costs have grown. I don't know if it's actually doubled, but it's pretty close to that, 40% growth, 50% growth type of situation since they've announced it, right? So it's maybe 50% growth, not doubled. sorry,
right.
50 around 30 to 50% growth in year over year, which is a hell of a paycheck.
Yeah.
Right. I mean, the expenses are going high, and they're struggling with it. So we'll see if they can.
It's interesting to me to see a company like Amazon, who has obviously huge amounts of power or leverage in the transportation space, and they struggle when they start trying to implement their own network. And this is pretty consistent. I mean, anybody that's a huge shipper in the country, whether it's like a Coke, Walmart, the Shaws and all these big companies, they have their own private fleets. It makes total sense for Amazon to have its own private fleet to an extent. Now, in terms of figuring out what exact percentage of that they should have or not is another big question. But, they fired FedEx. So
they did fire FedEx, so there's a need, right?
That's a big move because I know that they were, roughly 1-2%?
Yeah, of gross sales. Yeah, of overall sales.
Yeah, so it wasn't it doesn't sound like big number in that regard, but that's a huge impact to a freight network.
It is, and I think UPS was struggling this fourth quarter, this holiday season with the excess package delivery, and Amazon was as well because, as you said, 1% is huge on 250 billion. That's gets to a big number, right? And that's another thing. Walmart, they know transportation.
Yeah, they have a whole section.
Yeah. They run probably. I think the certainly trucking fleet. Like a Class 8, dry van, trucking fleet. I think they have reefers too, but they certainly they have the largest private fleet.
Yeah, I think they got 9,000 drivers. In October, that was the number that I saw.
And basically, Dooner and Chad on What the Truck yesterday. Dooner's in this whole thing about our Walmart drivers pay too high.
Yeah.
And it was based on a call in from our XM Sirius radio show that airs on Saturdays, and that they pay a really good wage to the drivers.
Yeah, it was 82.5, I think. Or they just raised it to 82.5 or 87 or something?
It's very good. You can hear them on satellite radio advertising consistently.
And
it's in the 80s.
It's one of the best. Nice. If you're a driver, it's literally like the gold standard. Like, it's what you want to drive for, and it's not just about the money, but it's their dedicated routes.
Stay close to home.
Well, you know where you're going to be on a daily basis, and that's really what Walmart is kind of capturing right now. That momentum from knowing that Walmart's going to have the item that I need when I need it, so they can hold on to that, and that's where Amazon has been struggling here in the last several months.
It is. They have a great vendor network too, so that the driver knows he's going to deliver at a Walmart DC, and he's going to probably pick up from one of the vendors. Right, one of the thousands upon tens of thousands of Walmart vendors, everything from like garbage bags to TVs, even. Right, so you're going to go pick up one of these vendors. You're going to come back to another DC or maybe the same DC that you left from your home base, and it's a very regular route. And private fleets, that's the reason why their turnover is
one of the lowest.
Minuscule compared to the 100% plus,
but most
turnover on for-hire fleets.
Yeah, that's for-hire fleets versus private. I mean, most of the time, private fleets do have much lower attrition rates, regardless, because most of them are in that same space of being dedicated, A to B, B to A type runs. Now, the thing is about comparing them to that, like the outside. Now, if you're a for-hire carrier for Walmart, you're not necessarily super excited about going to a Walmart DC.
True. I've brokered a lot of loads in and out of Walmart DCs.
And it depends on the DC. It's very DC specific.
That's what I've been calling around a little bit this week, talking to my broker friends and getting a highlight, because it's been a few years since I've worked with Walmart or a DC. And it's very independent, that they run very differently. And that's something that you would think that would be more standardized. But they operate much differently. There's different loading type of situations, and if you can have your doors open, if you're running refrigerated, for how long, it can vary.
Well, it's like any time you outsource any service for your company, like you lose a little bit of control. You have a little bit more flexibility. You're controlling costs effectively, because you're basically trying to say, I don't want to be exposed when the market drops below a certain level, but I want to be able to be covered when the market gets super hot. Now, what that does, though, is now that you have these outside carriers, they don't know your processes. They don't know, they don't have the timing down. That Walmart driver knows exactly where he needs to be. He's been doing it for years, hence the low attrition rate.
Yep.
The outside carriers have other customers that they're servicing, and they have other networks that they're trying to balance out, and all these other different processes.
It's good, too, because if you're a Walmart driver, you go to the DC, and the DC is ran by your coworkers, which is a much different relationship between a typical dock worker or a warehouse worker and driver. And whenever you go to your vendors, you're a customer, right? So it's a very different type of dynamic, which is much better. And that's the reason why more seasoned drivers get the job, whether it's with Walmart or another private fleet. And in the for-hire market, especially large for-hire carriers, are hiring out of school. It's kind of the training grounds for.
That's a good point.
For that medium term.
Yeah, you don't go to
first 3 or 4 years, right?
You don't start at Walmart as a driver.
No, you do not. You do not. You have to be very professional, very very on time. uh, you just have to know the ropes,
Exactly.
right?
That's another good point in terms of being able to work with Walmart.
It is. It's definitely. So where do we go from here on Walmart?
Well,
What's next on the notes?
we can go through. We talked a little bit there about the transportation and supply chain angle. We can kind of that kind of drifts us into the M&A discussion and the rumors that have been circulating the last couple weeks. They're kind of fueled by a professor from NYU on Twitter. His name is
Scott Galloway.
Scott Galloway. I was thinking Joey Galloway. I always think about the baseball.
Well, I know, right?
I don't know why. But yeah, so Scott Galloway, he said that he predicted that Walmart would purchase FedEx, would acquire FedEx at some time in the future, maybe in 2020. Do you guys have any? You think those have any validity to them? And if not, what direction do you think Walmart goes?
I want to hear Zach's opinion.
With
I've
M&A?
got opinions on this one.
Let's hear them.
It's hard for me to imagine Walmart fully executing this. I think it's a great theory. This would be one of the biggest M&A deals in recent history. I mean, Walmart is a $320 billion market cap. FedEx is about a $40 billion market cap. So this to me would be very difficult because Walmart, again, like I said, they have their existing infrastructure. FedEx is about as infrastructure heavy as you can possibly imagine. This is a company that has built itself through acquisitions, but they have been integrating slowly over the past, 30, 40 years. And they are literally like locked tight. I mean, you cannot divert from your processes in FedEx. So Walmart is very cost savvy. I mean, that's really where they make most of their money is keeping their costs low. I was talking to a guy.
Very supply chain too, right? That's
savvy, but they keep it to a minimum. Like their tech and their supply chain is actually very old style tech. And I was actually talking to a guy that had worked for Walmart here in the past, and he was basically telling me, they're trying to upgrade all these systems. Think about the size of this, though, the scale of this opportunity. And he had actually worked for Amazon as well. And he was telling me that Amazon had not fully, their AWS system, which is like, huge.
Mm-hmm.
They have not fully integrated back onto their own infrastructure, on their own network that they're selling to other people. They still are trying to transition from Oracle in a space. So it takes a long time for this integration to occur. So for me, this is it's an interesting concept. I cannot fathom how they would execute this.
I can't either. And every time I talk about this, I always get comments, either LinkedIn or people emailing me about, FedEx has more of a focus on international than domestic.
That's true.
So that kind of sidelines this deal, right?
Yeah.
Is that basically one of the things that is hurting FedEx right now is slower growth out of Asia.
Yep.
Now, whether that's really true or not, or if FedEx has deeper problems than just global GDP growth, that is another question all in of itself.
And that's another point is like you have such differing focuses with these two things. They're not simply just buying a fleet of trucks that they can use for whatever they want to do. FedEx has other freight to move. And so if Walmart's going to say, well, you're going to put priority on my freight, then that's going to disrupt all of what FedEx is doing. This happens every time that there's an entertaining idea about a retailer or a bigger company purchasing a transportation company. People simply think that they can just patch this right onto their company. It's not the way it works at all, because that's why you don't see a lot of Walmart trucks hauling other people's freight right now, because that's a little counterproductive to what they're trying to do.
It is
in the long run.
I've tried to get into the private fleet before. It's been a few years ago. Just looking for backhaul, because that's what I always try to do. I try to hook into private fleets, whether it be Shaw or Mohawk or Walmart or Hobby Lobby or a few others, and it's very difficult to work with, especially as a broker.
Yeah.
Because if they have to sit for an hour, they're not going to sit for an hour. They're just going to come back, because the gross margin on the goods that they're going to haul back to the shelf, get it on the shelf, is a pittance to the $1,000 or $1,500 to get them back home.
Yeah, their main business is retail, like selling goods, not moving goods.
Yeah.
And so think about this in terms of just basic costs. So 4 to 7% of any good moved is in the transportation cost. That's nothing. So a lot of these shippers, I know several of them, just do not take transportation that seriously, because they bury the transportation cost in the cost of their product.
Oh, you're
in their COGS.
Looking if if the value, the retail value of the goods that you're transporting on a trailer full for Walmart is $50,000, right? Your gross margin off that at a normal retail's clip is going to be at least 25,000. So 25, you're not going to tie up $25,000 worth of gross margin getting to the store shelves for a $1,000 or $1,200 load to get you back. That you might have to wait a couple days, or maybe not even a couple days, a couple hours.
Right.
I mean, a couple hours, even an hour. They're like, nope, we're going back. We're going back, and you can see the economics in your head.
Yeah. No, I mean,
and that's the reason why a lot of private fleets don't even deal with backhauls,
and
unless they're perfectly aligned.
And they're okay losing money.
Oh yeah.
That's because they built all that backhaul cost into their product already. So it's not the same thing to them. So think about trying to utilize that capacity. It's unreliable, which is something we just talked about. There's two things that you can offer somebody for transportation. It's price and service, and capacity is in that service number. So if you can't do either of those things, consistently, you're at a big disadvantage. And that's really why shippers, across the country don't necessarily want to have too big of a private fleet.
You're exactly right. Yeah, and then there's this reason why they have no problems as well with hauling empty going back. So when you look at empty miles by a private fleet, they are extremely high, and they're extremely high for a reason because, as I said, the product on the trailer is much more than being a trucking company and trying to make $1,000 on a backhaul. Who cares?
A 95 OR versus the 70 OR, cost. It's different for retail, but cost of goods sold is minimal for Walmart, and that's really, like I said, that's where they have made their money, is keeping their costs of goods sold to a minimum.
Exactly right.
That's why they can knock those dollars down on their commercial and stuff.
Yeah, I'm with you both. I don't think the FedEx rumor holds much water. Doug McMillan, the CEO, said in the last earnings call that we need to do more and we need to move faster, especially with assortment. So I think that's where their focus is at. I don't think it's on growing so much as it is efficiency. And you can see that with
through M&A, right?
Yeah, well, through M&A and through partnerships. The last couple of years, they've made a couple partnerships with one being Gatik. It's an autonomous vehicle company. It's not their first one. They've also partnered with Waymo and Udeliv and a lot of other people. But they're running pilot tests in Arizona and in Arkansas as well.
Yeah, those are some of the deals that Carrier Direct actually pointed out to us and sent over, where there's partnerships and their theory about efficiencies in warehousing, where you see Amazon spending a lot of money as well, and Shopify too. Shopify just had a big logistics. It was robotic or automation in warehousing. I wish I could. Is Rivers, 3 Rivers or 5 Rivers. And basically it's automated warehousing, picking, ordering type of fulfillment efficiencies, right? So you've seen all 3 of those players really diving into that.
Yeah, Walmart's doing it as well. They've got a partnership, and they've got a proprietary technology called AlphaBot, which is going to help the online order fulfillment in store, so that associates don't have to walk the aisles back and forth picking goods. They'll have basically a surveyor belt, a belt in the back that will automate the picking process. So it's going to increase their efficiency of this online pickup exponentially. So I see that being the direction Walmart goes, either in M&A or in partnerships in the next couple of years. I don't think they're going to be making any massive acquisitions like FedEx. I don't know which holds much water.
I think it's really good buying those niche brands. I really do, because if I started my own company and I had a niche brand and I had a following, and basically whether it is outdoor clothing or golf clothing or whatever, right? And being able to ramp it up to where it's a thing, right? And basically I'd have to invest to take it to the next step. You're going to get the audience, and you're going to get the supply chain distribution and fulfillment from Walmart. You sell out, hit the beach.
Let me pose something to you though, because I've read this about both Bonobos and ModCloth. These were very niche brands, digital native. They had almost like a little bit of a cult following online. People were very proud to buy these brands, and kind of almost had a social interaction with these brands. And their fans were pissed when they sold to Walmart.
It's pretty standard when you have that little guy sell out.
So what do you think? And they both of their sales kind of tanked in the quarters afterwards, because they say, oh, you know what, you're a Walmart brand now. I'm going to go find my new niche little online brand. What do you think? What do you say to people like that? And what do you say to Walmart going out and doing that? You have any thoughts on it?
Well, it happens all the time, right? With any of the niche brands, it happens. But you have two hard choices if you're running a brand like that, right? Because you kind of have to go all in again to ramp up and kind of build what Walmart can bring you. They could go the way of third party sellers, more like Amazon or Shopify, to where it's an arm's length, and just in the back end they handle your fulfillment and basically so some marketing out dollars and some exposure, but it's kind of maybe Walmart's hiding behind the curtains I think like the Wizard of Oz. I don't know.
Yeah, well, it depends. Now, a lot of these brands, and I don't know this for a fact for Bonobo or Shoes.com or whatever, but a lot of these products come from the same spots.
Yeah.
So
They do, yes. Yes.
I don't
facade.
necessarily like it. So I'm going to relay this to something that I love, which is beer.
Of course.
So this happened in
We all know that.
in the beer industry. Now, this was, I know the whole history of beer, where basically, Budweiser and Miller basically was predatory back in the 60s and 70s, basically buying all these smaller breweries across the country and just not buying them so they could integrate, but buying them to capture market share.
Yep.
And I don't think that's the case here at all in terms of Walmart. I think they're truly trying to purchase expertise as well as a particular product. I think over time they'll acquire enough people. Again, like I said, it's not the same as beer, where you're getting a different beer now than you did. I know when they dismantled the Rolling Rock, the glass, there's a glass fermenter that they had there that was famous in Latrobe, Pennsylvania, and it just wasn't the same anymore. So now it's legitimately just a different product. I think with Shoes.com, Bonobo, I don't think they changed any of that. I think they kept it all the same, and so they could potentially leverage. It's a marketing game at this point, but they could leverage Walmart's infrastructure at this point, which is why it's beneficial to them in terms of this idealistic world that I'm trying to live in right now. But I think the reality is that these owners wanted a payday,
Yeah.
Of course.
as I would.
Of course.
But I think that there are positives to the situation, and these people that are out there thinking that, hey, I'm getting this really unique product. I mean, if you can put on a shirt and it's the same quality that you had before, I mean, there's nothing wrong with Walmart going out there and helping them out with some infrastructure.
Yeah, there's nothing wrong. I didn't even know Bonobos is that how you even pronounce it?
Bonobos.
Bonobos. Until we started doing this research, I didn't even know that Walmart bought them.
Yeah.
But I get served ads constantly by Bonobos. I can't pronounce it. Whatever. It doesn't. It really doesn't matter, does it?
No.
So,
But I mean, I think people need to kind of get over themselves a little bit
Yeah, I
in
agree.
this whole like, oh, you shouldn't sell out type atmosphere. Like,
no, everyone should sell out.
you should sell out. I mean,
You should.
unless you're really passionate. Now, some of these local breweries, I really do believe they should keep it right here, because that's a perishable good,
Yeah.
and your quality does degrade the bigger you scale it. You can't simply make the same product in that regard nationally. They've figured out, I mean, most of the time they figured out how to make these goods at scale.
Yes.
And-
Yeah, you have to be able to do that.
Yeah.
Right. So a lot of the local breweries, until they can make it at scale, no one's going to buy it.
Not in every circumstance is bigger better, in my opinion. I think that you get to a certain point where quantity outweighs the quality, and you're going to make an increasing margin over that quantity. And this is what Walmart does. They are the kings of implementing this. So I think there is a concern when they do purchase some of these smaller companies that quality will start to degrade over time.
I think that might be a fear, but if you just let them operate, because of their high margin items too,
Yeah.
right? So why mess with that? You let them design, you let the companies go off design, quality assurances, keep the same quality. There's no reason to try to expand those margins, because they're already high margin, not necessarily luxury, but designer brands.
Yeah.
In most cases. So let them go do that. Take care of the fulfillment. Put it into your brand portfolio, kind of like the large beer companies, right? Or the large, Coca-Cola or Pepsi.
Yeah.
They don't just sell Coca-Cola or Pepsi. They sell bottled water. I don't know if it's still on a tear of being the highest growing beverage for either of those two, but it was for a while.
Yeah.
Right. So why mess with it? Just put it into your portfolio. and you're good.
And Budweiser has changed their game. I guess AB InBev now, they have changed their game to simply from purchasing and dismantling to we're going to buy an interest. I know Terrapin down the street here in Athens, Georgia, they have a 49% interest in. They do not have controlling. The beer is still as good as ever, in my opinion. But now they have a distribution network that is far stronger than they had before. So now they can get that out, across
And
the
for
country.
anyone creating a brand or trying to sell retail, you need that distribution channel.
Yep.
That is the hardest thing to build,
Mhm.
is to build that sales channel, that distribution channel. So that's something that the big beer companies or Coke and Pepsi or Walmart can step in and help you with. And that's where the whole ideology of third-party sellers on Amazon arises
Yep.
from, right? You have that distribution, but you have control. But the downside to the Amazon model is now you have Amazon competing against you, right? You have to
right.
pay Amazon to get listed higher. And as you get listed higher, if you're selling really well, they're going to knock off your product and put their knockoff right
the
next to
Amazon
you,
basics.
right at half the prices.
Yep.
Right. So that's the big problem with the
So
Amazon. And
you just you posed a question. You were talking about you need the distribution. One company that does the distribution really well. We've mentioned them once, is Shopify. Who do you think poses
Right.
a bigger risk to Walmart moving forward? Is it Amazon or is it Shopify? Different business models, but both a big risk. We this isn't a scripted question. It just came to
no,
my
it's,
head.
it's,
so
it's not, right?
take-
Great
you know,
question.
Yeah.
I still think Amazon is the bigger risk, just because, like I said, Walmart is in a different space of that brick and mortar. They're relying much more heavily on the consumer coming to their, I know that they even let truck drivers park there overnight because they are trying to gain a bunch of traffic, as much traffic as possible. And Shopify is literally just an online marketplace. I don't think people that are buying on Shopify are necessarily, if there's a Walmart more than likely within a few miles of where they live. So
yeah, 5,500 stores. There's,
Yeah,
there's
so-
one somewhere.
So the idea that this online marketplace is really going to threaten them that significantly without a huge amount of distribution like leverage, which Amazon technically can build and will probably continue to build here in the near future, which is the biggest threat to Walmart moving forward. Now, I'd be interested, Andrew, in hearing what you have to say, because you just said, I prefer Walmart over Amazon.
I do. I prefer Walmart over Amazon. One, I think one of the biggest issues is, two things. My mother is a Walmart-aholic, so I
Okay.
grew up going to Walmart 3 times a week with my mother. So I have my roots in Walmart.
See, I got mad at my mom when she dragged me to go shopping.
I would love
like,
it because I would just run off and then she'd have to call me over the intercom. Andrew Cox, please come to the front. It happened weekly. And then second, I live on Signal Mountain, so I live half a mile from a nice Walmart. So I go. And there's actually a stat that I didn't get to mention from that Amazon past its prime article, and it said the percentage of customers that visit Walmart in store at least 4 times monthly has increased 5% year over year, so from 58 to 63. So 63% of people say they go to Walmart 4 times a month. I go like 4 times a week, so I'm definitely one of those people. Kevin, you were given some funny looks while he was giving the Shopify argument. Do you disagree with him?
No, it's not that I disagree or agree. I just came up with another question let's flip this on its head, right? Should Walmart buy Shopify?
Now that is a great question.
Right?
I love that because that actually is much more symbiotic than the FedEx model, in my opinion.
Yeah, and it's about the same price too. The
Yeah.
market caps are both right around $40 billion.
You're probably going to get a little bit more of a growth expectation out of the Shopify.
You will.
Yeah.
You will. And they're losing money, but that doesn't matter, right? Because you're buying that expertise.
And Shopify has...
They do 45, their merchants do, I believe, 45 billion. No, actually, last year they did 45 billion. They're expected to hit about 60 to 70 billion dollars in online sales. Their customers are. So they're basically the platform for $70 billion of sales. So little background.
No, that's great. That's a great idea. I actually love that.
Yeah.
I haven't done any research on
Let's
it.
start the rumors right
Sounds
now,
nice.
right?
It's happening.
Let's start the rumors that
Second quarter.
Walmart should buy Shopify right now.
That's two totally, they both specialize in what the other doesn't.
Yeah.
And they both have, so Shopify obviously is growing their logistics situation with their model, and Walmart needs that specific model for moving forward to compete in the new e-commerce space.
It reminds me a bit of the Visa and Plaid acquisition today. I don't know if you guys have seen.
I saw that.
So
Yeah, I
Visa
saw the
bought
headline.
Plaid, and Plaid is is a connections platform that basically, if you want to connect your bank to your Venmo account or to your PayPal account, they create the existing software to connect things. So it reminds me a bit of that, in which Visa has its expertise in payments and in processing, but they need the connection to other banks. So I think there's a little bit of an analogy there. But Scott Galloway also said that the gangster move would be for Shopify and FedEx to merge. So you don't see that one going.
Well, they're Toronto-based companies, so that's never going to happen.
No.
It's never going to happen.
US and
I don't think you
companies.
can sell the airplanes, right? I think the last time we talked about this topic a couple of weeks ago, me and JP were talking about it, and someone linked in while we were on the show saying you can't sell, the airplanes assets to a foreign company. Or not a foreign company in a foreign country, right?
Yep.
So I think, and basically you're talking about FedEx being foreign owned. I don't think the federal government's going to go.
It just
go
depends
for that.
on.
They're just not going to do it.
Depends on the transaction too. I mean, you could. Again, but the business models themselves, I don't see it.
I don't think the Shopify management team probably has the expertise to run FedEx. That's all I know, right? I mean, I don't think they'd want to.
Yeah,
I know I wouldn't want to do
about
that.
FedEx. It's really hard for me to imagine them being the subordinate to anybody. Honestly.
Exactly right. Yeah. Especially with Fred Smith.
Yeah,
in the captain's chair,
It's
so
not
to
gonna
speak.
work.
Right? It's not going to happen. Not going to happen. So
Any last words on Walmart?
No.
Anything else?
no. Let's
to go?
run into trucking capacity. Let's talk about the DHL supply chain pricing power index real quick, and then we'll hit the trade.
Yep, that's good with me. So we're at 40 this week. A quick refresher. So we have a gauge all the way 0 would be all the power to the shippers. 100 would be all the power to the carriers. We're sitting at 40 now, which is near a balanced market, but we think that's probably going to keep going towards the shippers. When we did this, we started doing this back in September. We started near 40, and then it just sequentially fell week after week towards the shippers. It made a big run right before Christmas. It made it all the way up to 45, nearly a balanced market. But now capacity is getting back to normal. It's loosening. Zach, what are you seeing? If you were a broker or a carrier, where would you be going in the country to gain some pricing power?
So right now, there's not really
Tell
many
us about
places.
January.
Yeah,
Tell us about January. Let's just
we-
swap January stories in a freight brokerage
Yeah,
or
we've-
an asset base.
Yeah,
That's much more fun than talking about where capacity is going to pick up in January.
Me and Kevin were on the spot a few weeks ago talking about January, and we did me and Anthony Smith did the Freightnomics podcast, and it was literally titled "January is the Monday of the year," because for freight and anybody sitting on the asset side or brokerage side, it is miserable. It is just not that active. You're talking about, every year, even if it's in a good year, January is the worst month of that year.
It is. The only thing I learned in January in freight brokerage is how to build memes.
Yeah.
Really, honestly, that's what we did. We built memes, and I taught everybody in the office how to play liar's poker.
Nice.
And we played liar's poker for a couple hours a day.
That's
because
awesome.
I mean, it's just slow. It's just slow, and you should be making sales calls. You should be doing a lot of things that we weren't doing. So
Yeah, this is the time of year where you're actively trying to build your depth. If you're a carrier, you're just trying to service the freight you have as sufficiently as possible. And if you're a broker, you're trying to just not lose a bunch of money. I mean, and you can do that relatively well, but this is the time of year for the whole managed transportation side where you're building accounts, building relationships. There are some, I will say this, looking at our Sonar data, tender rejections and volumes and such, it's a very interesting thing. And we're going to break some of these sections of the country down tomorrow on Freightonomics, but the Los Angeles market in particular, we had AB5, the Simulbill 5 thing that got another stay of execution, but that section of the country fascinates me, Los Angeles. So we've actually seen tender rejection rates go a little horizontal here in the last couple of days, which to me is insane.
in Southern
January.
California.
Yeah.
Okay.
In Los Angeles, Ontario. Ontario is the second biggest market in the country in terms of outbound volume. If you go to Google Maps, look at there's just a sea of DCs.
Oh yeah, I've driven through there.
It is insane. It is the biggest concentrated area of DC shipper activity. You can go anywhere in the country. And there's reason for this, and it's because all the Chinese, and we're going to talk about that here in a little bit, but all the Chinese freight comes into the port and sits there and waits release into the wild. And that area right now is showing signs of at least changing, but volumes year over year have collapsed we're looking at about a 20 to 30% decrease in year-over-year volume out of the Los Angeles and the Ontario market.
Trucking outbound?
Truckload outbound volumes.
Yeah, I think that goes back to the phase one trade deal.
Yep.
Right there, because imports into LA have been very depressed. We published a few stories. We have one out right now on FreightWaves.com from one of our amazing contributors from CNBC, Lorianne LaRocca, and she kind of details the what's going to be signed tomorrow in the trade deal, and kind of the export market's been very weak. These special purchases really haven't taken place. There's doubts whether they will be taking place, and the LA ports are significantly down year over year.
I think imports to the LA to LAX has gone down every month for the last 12 or 13 months since that pull through pre-Chinese New Year last year.
You look at our customs data, and it is stupid. Like you see this huge mountain in late 2018, early 2019, and it actually the seasonal peak for maritime shipments is roughly August, September, on average every year. The peak for this year was in January. I mean, it was because it was coming down because this huge pull forward effect. So I mean, that obviously has a lot to do with the declining volumes out of LA. But
do you think those warehouses are empty in LA now?
Oh no, I mean they
come
definitely
down pretty good.
We're waiting on some inventory levels right now. I've got Anthony working on that a little bit, but I'm assuming that after the big retail season that we just had, a lot of those inventories got pushed out. I mean, they had to, just by looking at some of the data. It's like there's a huge amount of long haul freight that all of a sudden just exited LA in October, and most of the time you see this, it happens every year. All that stuff that they've been importing in September, August, goes to those DCs, and then they ship it to the East Coast. Well, now there's an East Coast preference starting to happen. They're starting to shift it more going to that.
The
area.
Panama spread.
Yeah, the Panama spread, but also the Suez is now more preferable.
And that's as American shippers have tried to, or manufacturers have moved away from China towards Vietnam and other Southeast Asian
and also
countries.
India. India is one of the fastest growing importers as well. So there's multiple options. Europe is even on that list of I think Italy and Spain have actually
you have
become,
southern Eastern Europe or pretty low wage
and
areas.
And China still dwarfs everyone. I mean, it's not even close. And they honestly, all these other countries, minus maybe India, just don't have the infrastructure. I mean, everybody talks about Malaysia and Vietnam like it's this huge threat to China, but they're really not.
They're really not. So it's about 540 billion in 2018 imports from China to the U.S. I think Vietnam might have been 54 billion. India wasn't that much. I can't remember the exact number, but
it's nothing.
It is dwarfed by China.
They're
all dwarfed by China. So you can move out of China, but there's very, especially if everyone's moving out at the same time,
right?
Then you're bidding up everything else, the labor and basically any existing facilities, and everything else has to be greenfield. So it's very expensive to get out of China too. So you have this catch-22.
And they also haven't developed the infrastructure. I mean, I guess that's been the theme of the day.
Too, right? We're not even talking about the ports yet.
And actually, China owns some of those ports, so which is kind of the scary thing. China almost saw this coming over time.
Yeah. I'm reading a really good book right now. It's Tim Marshall wrote it. He BBC Sky reporter about prisoners of geography, and it's kind of like 10 maps that changed the world, and it talks about how we're all prisoners of our geography and how China certainly is. So you say that they saw this coming, and you go through that book and you're just like, oh yeah, they definitely saw it coming. This is the reason why there's these boundary conflicts in the South China Sea about rocks jutting out, and people are claiming those rocks, and it all has to do with navigation. About navigation. Going in, doing investments on ports in other countries is all about making sure that your trade routes are secure.
Yeah, no, they've effectively built up, because these countries didn't have the money to invest in their infrastructure. China says, hey, we'll loan you some money to build out the infrastructure. Oh, you can't pay it? Oh, we'll just take it over for you. And then all of a sudden, China's now in India. They're in Africa.
Sri Lanka.
Sri Lanka.
Yeah, very good. Anything else on trade?
Andrew?
Yeah,
I just want to pose the question. You guys, we got the phase one trade deal coming tomorrow. Do you think a phase 2 or phase 1A, anything, do you think there's another trade deal done after phase 1?
I think we'll talk about it for the next year. I don't think
I could agree with that.
I don't think that anything will happen quickly.
We'll talk about it for the next 3 years.
Yeah.
probably. I don't think it'll ever get done.
Good.
No.
Okay, we're on the same page there.
I really don't. So we're going to move into, do a quick shout out about Freightonomics. I know you talked about it just a second ago, but when's it on?
So it's on Wednesdays at 2 p.m. every Wednesday. Watching it on the streaming for FreightWaves,
Yes, exactly.
FreightWaves Live. And me and Anthony Smith talk about freight market and economics, and we merge the two. And we also keep it very topical. We try to keep it like in the moment, but also dig deep into some of these ongoing concepts. Like tomorrow, for instance, we're going to dig deeper into Southern California in general, the freight market out west, how it's different from the rest of the country. We're going to break down, percentages and what it does, like how it ripples into the rest of the country, et cetera.
This is fascinating to take one market, which is a huge market, it's second largest. If you put LA and Ontario markets together, is that they're
the
number
first?
one?
They would be the biggest.
They're the biggest.
Single, I think Chicago Joliet, which is Chicago effectively, they would be the second biggest in the country.
Okay.
So, I mean, in terms of freight volumes, Los Angeles has a huge impact to overall capacity, because you think about the way that you have to operate out west is 100% a 180-degree turn from operating out east.
It is.
Yeah.
It definitely is, especially once you get out of the LA area and you hit I-40.
Yep.
East, there's not much.
There's nothing.
Yeah.
There's nothing.
Desert.
So it's really a great route for trucks,
This is
especially if you only have to go to Riverside or Ontario.
Yep.
And you miss LA traffic. I mean, that's a great route.
Great route, except if you're operating in the state of California, which is another issue.
True. There's a little thing that you have to so Wednesday it's 2 o'clock.
Wednesdays it's 2.
Okay, very good. Are you ready for long short?
As I'll ever be.
All right.
Yep.
What's our first one?
The first one is the recent IPO that has crashed pretty significantly, but bounced back a little bit. It is Peloton. So this is the workout.
How much are they down?
Well, they were down like 40%, and it's come back up. It's bounced back. I think a little bit on the news that they've released this new it's a digital app, so you don't need to have like a bike or anything. You just have the app. You can put it on your computer, on your phone, anyway, and you do workouts through the app. I think it's like $12.99 per month. They call it Peloton Digital.
And what's the original business model? Sorry,
the original business model is they build very expensive subscription model bikes. These bikes are, I think, over $3,000. They also have a treadmill that's over $6,000. They're getting into the mirror as well. That's like a workout mirror in front of you.
Which is really cool.
Those are actually really good. Those are thousands of dollars as well, along with like a
$1,500 with I think it's like a $40 or $50 subscription
per month. So, are you long, short Peloton? Do you think that this business model is sustainable, or is this just a product line of a bigger company?
So basically, and they charge a $60 subscription fee for the television that goes in front of you that has a high, it's basically well done content with. I don't know if it's celebrities that does it, but it's well-known people in the exercise and fitness space. So it's this big budget type of programs that you can do on your bike. I think it's a really good product. I'm short this, on the equity side, 10 times revenue valuation. I'm short that. I don't think they're still selling exercise bikes, and their margins on the exercise bikes are roughly around 50%. Same with their subscription model, which is kind of high for basically online content to only have a 50% gross margin. So, but I think it's well done. I think it's probably going to end up being a product in of a larger exercise company, or probably not exercise company, but of some, maybe Walmart. Maybe Walmart buys them, right? I mean, I don't know.
I think
I
you're
don't know.
spot on there, actually.
Yeah,
I think
valuation's rich.
They're a little too expensive. Their costs are a little high right now. They need to be part of something else. I think the technology's great. The concept is wonderful.
They're a niche, though.
And people are going to work out. I just don't think that there is a big enough market for this high-end.
It's a niche.
Yeah,
it's a niche. It's a high-end luxury product. It's like we're going to sell luxury products that, like on a Walmart scale.
But
maybe they do.
You can go get a bike. and just set this up right on top of it.
I know.
And I mean, I know that the bike is more complicated than that because you pedal with the terrain, they move it, they control it with you. So it's technically a program that they're executing, but you could technically do.
But who wants to put that up there? I want a Peloton.
I could be wrong.
In a completely great view on top of the world with glass walls, so I can look out and see all this, maybe gorgeous nature as I'm inside riding my bike, watching my video screen, or at least that's how the commercials portray.
Yeah,
so
right.
I don't know.
With a beautiful girl on it.
I guess I would love
that.
to hear what the market cap on these, or the market value, industry value, the TAM is for the exercise, the fitness equipment, because I think a lot of these people are already fitness heavy that are buying this.
I do know that the fitness product industry of unused equipment is about 95% of that 100% TAM for the fitness industry, right? Because most people unused, they just sits unused in the corner, right? Because most exercise products after a month or two just get put in the corner.
But maybe this provides a little bit more stickiness because you're paying for the subscription.
True.
Maybe this is their answer to that because they knew that people go buy bikes and then they just don't use them.
I think it's a great product. I think that the sales are amazing.
Yeah.
But 10 times revenue is a little bit rich.
Yeah. No, I mean, I think that it's I like the idea of Peloton. I don't like the price of Peloton. So I think if they can continue to diversify, and I think Peloton Digital at $12.99, that's a good product. I think sitting in front of your TV screen in your living room, that's good. I think that if they continue to diversify into smaller things, especially subscription-based stuff.
But they're a premium brand.
I have one more thing. I have one more point about the subscription model. Yes, their gross margins are really low relatively for that content. But if you look at the progress people are making in deep fakes and using AI to build programs, I think if they can build out or even acquire a company in which they can automate a lot of that process where they have to stop paying these well-known fitness athletes to do these programs, you see those gross margins really incline. So I think, and they can even make it, they can make it personalized to you. It's not so much just one program for everybody. So I think if they can get that done.
And the fitness athletes are really not that necessary. And I'm not buying Peloton because I'm having somebody from New York City who's Jillian Michaels or whoever yelling at me for an hour.
Yeah.
True. But it's a luxury brand. If you start making affordable or $10, $12 products,
you think you diminish
that brand.
Even if it's not attached to the brand, to the good itself, the bike or the treadmill. If they're selling,
you diminish it.
You think so?
Man, you diminish it.
I think you can segment.
Ferrari sells T-shirts, and it does diminish the value of their
T-shirts, but they don't make a $20,000 car either. I think Mercedes did that, and now you're flooded with a lot of the lower class Mercedes, which kind of hurt the brand
overall.
I don't know.
That's the reason why it's long short,
Mm-hmm.
because we disagree.
Yeah, I like it.
I might get hit disagreeing on the next question, but
yeah, I might. Last week we did long short on Tom Brady and the Patriots. Was that his last pass, that pick to Logan Ryan? This week, our long short is: will the Titans be in the Super Bowl come February? Will they win this weekend in Kansas City?
And we have two Titans fans sitting in here, so
Kev, start it off then.
Yeah. Well, no,
we'll finish it on a good note. You take it on. You take get the bad news out of the way.
I think if Derrick Henry keeps Patrick Mahomes off the field long, if not, if Patrick Mahomes and the Kansas City offense gets time on the field, this is going to be a long day for Tennessee.
Short and succinct.
Yeah, Tennessee getting behind would be obviously a big problem.
That would be a problem.
Kansas City has proven that they can jump out on people
and come back after large deficits, right?
Yeah, they did that to Houston. I blinked and they were back up.
Yeah.
That was insane.
I was at my house and it was 24-0.
Yeah.
I left, went to Universal Joint. It had to be 5 minutes later. I get there and it's 24-21. I was like, what in the? Of course, I'm long. I think the Titans going to be there. I think I hope if we get the coin toss, we keep the ball. We get a 7-minute drive, put it in with Henry. I don't want to see us get behind early. We are not built to come back from behind. But hey,
but if you can run the ball and
confident.
keep Kansas City off the field, Tennessee can win. It'll be an amazing run.
Well, it's a matter of defense on the Titans side,
and they've been playing lights out. And the Titans historically against Andy Reid, we're 8-1.
Really?
Yes.
Nice.
Between the Eagles and the Chiefs, we're 8-1. But
Somehow.
Oh, but
Somehow.
that's the Eagles.
but
but those
3 or
were
4 of the
high-powered.
wins, yeah, those were good Eagles.
Yeah.
Hell, he went to like
The Eagles have
5
never been
NFC
good.
championships.
No,
Yeah.
I'm kidding.
They were real good. They could never win a Super Bowl, but they were good.
Sure.
Well, that's all
So
I got.
yeah, that's it. Thanks everybody for listening. Again, Kevin Hill, Zach Strickland, our guest, and co-host Andrew Cox. And thank you again for all the research and segments and contributions from Carrier Direct. And we'll see you next week when we'll talk about finance and freight and maybe a little bit of football. If Tennessee wins, if they don't, we might
No, we're
skip
never
over
talking
that.
about football again at that point.
I know, right?
But hey, if
So-
you guys have a company suggestion, by the way, we're open to many suggestions of companies
Yeah.
to break down. Please email us
LinkedIn,
or on LinkedIn or anything.
Cahill, so KHILL at FreightWaves.com. If you want us to cover a company, just shoot me an email. Again, LinkedIn on any of the live feeds or replays of feeds that you see on social media. We're always checking that. So we will go from there. See you guys later.
All right.